Good afternoon, everyone. Welcome to my live stream. If you are new to me, my name is Janae of Janaeam.com. I go by the Millennial Money Minister. My official title is Financial Consultant, and I teach first generation grads how to manage their money. So this month, in the month of June, it's National Home Ownership Month, and I launched a course helping people to prepare financially for home ownership. So it's a lot of different topics that's discussed to basically help you get your finances right so you can get approved for a loan. And so when you get in your home, you take the approach of buying a home that's affordable so that way you can keep your home. I shared my story earlier this week how my family was uprooted 12 years after we bought our home, and that's how I moved here to Virginia because I'm originally from New York. And it's not that my family didn't have the means financially to pay the mortgage. My dad just didn't make the best decisions with managing his finances. And so a lot of what I did to help me buy my home so that way, I would prepare myself to do the opposite of what my dad did. I included in this course, and I also made sure that the information that is in this course aligned with HUD, our federal housing agency's content that they require for their pre-home ownership education. So there's a lot of information in it. And this month I'm breaking down in bite-sized pieces so that way it's easy to digest because it's a lot of information. I'm breaking down different topics to help you with preparing for home ownership. So today we're talking about how much debt you can afford to have when buying a home. Now, when you are going to purchase a home, and you can let me know, you can let me know who you are and where you're joining from. And if you have any questions, drop them in the comments. If you look at previous videos, the thread is pretty long. So I do interact with people. So feel free to leave questions in the comments. I will answer them. And if I see them here live, I will answer them like right now. So get the help that you need, especially if you're thinking about buying a home. So that way you can get pointed in the right direction because that's what I'm here for. So, yes, we're talking about how much debt you can afford to have. So when you go to, so we talked about what you can do on your own, before you even go to the bank. But now is the process where you're actually walking into the bank, you're talking with a loan officer to try to get some money to buy your house. And one of the things that lenders look at is something called your debt to income ratio. And it is a deciding factor in whether or not you are approved for a mortgage loan. So that's why debt is very important. And my philosophy is I encourage people to pay their debt off if they can, because I'll talk about 3 different things that's essential for you to know about debt. But I encourage people to pay their debt off because it puts them in a better position, not only when their application gets looked at, but it helps you because once you get in the home, you're not bogged down, not just by your mortgage, but all these additional bills. And so, with the exception of student loans, because I get that some people's student loans is a mortgage in itself. So if your mortgage, if your student loans are like over $30,000, I don't expect you to be able to pay that off. But if it's under $30,000, you can knock that out in like 2 years. If you're serious, if you're focused, I've seen it done. So I know that it's possible. So I recommend if you do have less than $30,000 in any kind of debt, for you to pay that off as soon as possible, especially if you're going to buy a home for the first time. Now, I'll talk about, what the ranges are in terms of the debt to income ratio and kind of where you want to be. Okay, so I have a question about an adjustable rate mortgage. So, with an adjustable rate mortgage, you pay a certain amount for X number of years, and the rate adjusts after that. They are risky. I would say it's a good move if you plan to pay off your mortgage within the time that that rate will go up. So I know a couple, they got an adjustable rate mortgage, but they got it with the intention that they wanted to get a lower rate because they knew that they were going to pay their mortgage off in 5 years. The rate went up after 5 years, but their mortgage was completely paid off. So unless you plan to pay off your mortgage within the time frame that that rate will actually adjust and go up, or you know for sure that your income will skyrocket, I would not suggest an adjustable rate mortgage because you will put yourself in a bad situation. So that's my feedback. And there are ways where you can accelerate paying off a home, especially if there's no prepayment penalty. I highly recommend it because even if you're just putting an extra $100 towards your mortgage loan, you can literally shave off a few years from the 15 or 30-year time frame. So that's my feedback for that. Now, one of the reasons why, debt should be something you consider is because obviously if the amount of debt that you have is too high, you won't get approved. So if your debt to income ratio is too high, you won't get approved. And so the debt to income ratio, let's go over the formula for that. So in order to calculate your debt to income ratio, you want to divide they should disclose it in your paperwork. So the loan officer should be upfront about that, and it should be documented because I'm licensed for life insurance, and so even with term policies, you see when the cost will skyrocket when your coverage ends. So same thing with mortgages, it should be documented in your paperwork. It should be documented in your paperwork when your interest rate will adjust. And so that's awesome that you plan to pay it off within a few years. And I would just make sure that there's no prepayment penalty. So that way, you are able to do that because some, surprisingly, some lenders will penalize you for paying your loan off too soon. So you want to make sure there's no prepayment penalty and, that information is disclosed on when your interest rate will reset and go up. So that way you're not blindsided because people do get blindsided because they don't read. No problem. I'm glad that people are getting stuff out of it. And again, even if people don't enroll in the course, I am doing this series so that way you can get what you need to take the next step. So debt to income ratio, in order to calculate that, you want to divide your monthly debt payments by your gross monthly income. So this is pretty much everything you're paying on a monthly basis that hits your credit. So if you have a car payment, you want to add that to your minimum credit card payments, to your student loan payments, if you have a personal loan, anything that is touching your credit. That's how I describe debt. And you want to add those up. So we're not talking about collections and all that other stuff. These are just things that you are expected to pay for on a monthly basis. So debt is things that you're expected to pay for on a monthly basis, and it does show up on your credit report. So add up all of those payments and then divide that by your gross monthly income. And what that will give you is your ratio. Now, if you qualify for a conventional loan, which is a non-governmental loan, the max that your ratio can be is 36%. If you have a government loan, like a FHA loan, then the max you can have is 41%. So just to make it easy, your debt to income ratio, you don't want it to exceed 40%. And so you can lower your ratio by paying off your debt or by increasing your income. And, you know, we live in a day and age now where people got side hustles, and that's great. But if you're going to buy a home and you're counting that money, if you're not paying taxes on that money and it's not documented, you can't count that. So either you got to pay off your debt or you got to increase your income. And now if you do have a lucrative side hustle that is significantly adding to your monthly income, then you should be paying taxes. You should have accounting measures in place to document what that income is. So then you'll have the proper paperwork to provide as proof of income when you go through the home buying process. Okay, so those are from my solopreneurs. Like, I get it, we do everything, but if, you know, your job on paper, if it looks like you're not making a lot of money, but you know you got a lot of money, but you're not following all the rules. Hey, Mom, if you're not following all the rules with your side hustle, business, whatever, you cannot count that income at all. So that's something to keep in mind. So it's worth it to invest the money in the LLC, put aside your 20% for taxes, making sure that you have things on record so that way you can benefit from that. So now that you know how to calculate your ratio, you understand the importance of why you need to, you know, consider how much debt you actually have. Because again, if your ratio is too high, you won't get approved. So that's first thing. The second thing, obviously, with this ratio being a key determining factor on whether you get financing extended to you, paying down debt is essential. Because either you have to pay down debt or you have to increase income. And in one of my trainings, I focus specifically on how to accelerate paying down debt. And you can literally, like, it doesn't have to be aggressive. Like, you can take $100 and apply that towards paying down your debt and make significant strides with doing so if you follow the plan and if you follow the strategy. So in the training that I'm referring to, I included it on a previous video, but I'll drop it in the comments below. And then lastly, when you have less debt, that means that you have more money. That means that you have more cash. And my goal when, you know, people enroll in the course is not only teaching them how to get to a place where they can obtain a loan, but how to strategically buy a home that's affordable and you free up money, because with that money that you have available, now we can talk about investments and putting away money for the long term. But it's hard for, especially my generation, it's hard for a lot of millennials to do that because most of their money is going towards bills. And since a mortgage is a significant expense, it makes sense to get rid of most of your responsibilities before you go to buy a home, so that way you have the freedom and flexibility to be able to do other things, to think about your future. When you decide to buy a home because it is a serious investment, And because it is a long-term investment, that is a sign that you are ready to, settle down and be stable and think about the future. Those are some of the characteristics of being, a homeowner. And so by having that money available, it gives you the ability to do things that would position you to be in a good place for the future. So if there are any questions, pop them in the comments. I'd be happy to answer them. If you're catching this on the replay, you can also put your questions in the comments and I will respond to it. If you learn something, please share this. I would greatly appreciate it. If you know someone who is in the process of buying a home, tag them in the comments so that way they know this information. Or you can share it with them through Messenger, because I know I do that sometimes. And that's pretty much it. The replay will be available on YouTube. I am going to leave this up though on my personal page, but I am also recording live on YouTube, and so make sure you subscribe to the YouTube channel so that way you don't miss anything. These videos will continue Monday through Friday throughout the month of June. And if you want to learn more about what are the financial requirements for buying a home, what the home buying process looks like, and what you should be doing after you buy the home, I included the link in this video. You can enroll in my course, The Blueprint, Buying a Home and Building Wealth with Real Estate. It gives you all of that, and you get access to me and to get additional support as you go through the course content. So thank you all for tuning in, and I will talk to you all next time. Take care.